Hi Manoj.
Hi Ram.
So the topic for today is silver. Recently, uh, one of the AMC's Kotak probably did it initially. They had a press circular out. They stopped inflows into their fund for silver, which basically bought silver ETF. So it definitely caused some concern in the eyes of some investors. Obviously, silver price has gone literally through the roof, and given that somebody has stopped new inflows, uh, is it something to panic? Should one stop buying silver now? Why did this happen? So obviously, a lot of questions in the minds of investors. So let's get to those and see what the takeaways are.
Uh, let's go back to the basics. Uh, Silver as a commodity, silver as a metal. Okay, like everything else in world, price is a factor of demand and supply. And what we are seeing in case of gold and more uh, pressingly in case of silver is that demand is beating supply. There is a mismatch, and that is causing the spike in silver prices. Demand is coming from industry because now silver is increasingly being used in solar panels, in EVs, in clean energy. So there's a lot more industrial use than it was earlier.
So let's come to why silver is going up. Let's first tackle this question of why did AMCs like Kotak, SBI, UTI, ICICI, HDFC, etc., suddenly put a stop to this? What risk did they see that investors were facing on that day? Let's say.
So once again, going back to the concept. Now an exchange traded fund is a passive fund. So a fund manager does not use his or her strategies to play the portfolio. The fund simply buys physical silver and keeps it so that any increase or decrease in silver, that is what gets reflected in the ETF price. That is the concept of a gold ETF or a silver ETF, etc. So if a fund house is accepting fresh investments, then it has to use that money to buy physical silver. And what is happening currently in the market is there is not enough physical silver. There is an absolute shortage of physical silver, mainly because of huge demand for silver. And that is what I was alluding to earlier, that there is huge demand from central banks and there is huge industrial demand.
The London Bullion Market Association reported that their inventories are down 30% and they pretty much have low to negligible inventories.
Correct.
So that is so what you're saying we have to look in that backdrop. And as a result, on 9th October especially, the inventories, the silver ETF prices, the premium suddenly went up by 10 to 12%. So if you were a fund manager, would you be comfortable collecting 12% premium on something? It would be unfair to the investor, right?
Particularly the investor who's walking in now,
Yes.
because he or she is investing 100 rupees and tomorrow there is a price correction or this premium disappears, then
It would, right? As the supply eases out, it would. This is more like a blip. It's like a voltage spike, right? So you have a stabilizer which says, "Boss, let me stop this current for some time, and then we'll come back to it."
to some extent yes, but again, given the demand coming from central banks, etc., we have to understand, Ram, once a central bank buys, then it is no longer available in the market for trading. So that much of silver simply disappears from the trade that is happening. Okay, so that way supply is strained, and silver is not something that you can manufacture just like that. Okay, the mining is associated with mining of
I understand. So we'll get into the long-term trends and what it implies to investors. Suffice to say that the recent episode was more it was episodic, right? It kind of happened at that time because of the shortage on that point in time. Yes, the shortage continues. Industrial demand itself is outstripping supply, and as you said, central banks are buying in hordes. The this 10 to 12% spike at that time led to, it's like a circuit breaker in a way, right?
Yeah.
Yeah.
So as I said,
Fair analogy, circuit breaker,
yeah.
whether it is voltage or stock market for this case.
So we can use multiple analogies, but more conceptually, Ram, looking at the demand supply scenario, as I was saying, there are three principal sources of demand. One, demand from central banks. They recently started buying silver. Earlier, they used to buy only gold, but now close to 10% of silver mined is being bought by central banks, and this silver is unlikely to find its way back into the markets. The second source of demand is industrial use. We've seen that this demand is going up. There's growth in solar, there's growth in EV, and therefore this demand is also likely to continue. The third source of demand, which is primarily coming in because of the price movement that is happening, is speculative demand. A lot of speculators have entered into the market, are betting high on silver. And this demand hopefully will ebb because things have to cool down, as you said, circuit breaker or whatever. So here we can see some respite in the way the prices are going up, and then there has to be some sort of a balance. Okay, but coming specifically to the ETF on silver, what they have stopped is lump sum investment. SIPs are still being accepted. Obviously, SIPs are small in amount, and therefore, the amount of silver that you have to buy is much lesser and manageable. That is the reason why SIPs they're still okay with, but lump sum investments have been stopped. Two, everything else is going on as is. Okay, so withdrawals are all right, are being permitted, redemptions, systematic transfers, all the other things that happen with ETF are happening. So there's no cause for concern except that somebody who wanted to buy a lot of silver through the ETF route, that person's plans are going slightly awry.
Fair point, fair point. So that's very reassuring, Manoj, that this is a good thing that was taken by some of the fund houses in the interest of the investor. Now let's come back to where things stand today. The silver chart is just shooting up and up. Now, we know that silver has gone through very volatile moves, go back to 70s, 80s, etc. And, it's very wild move that it has seen. But everybody likes to think that this time it's different, right? So, what's your view on what investors should do? I mean, let's break this up into what a new investor entering this should do and what an existing investor who already has some silver exposure should do.
Okay, it's very easy for the second type of investor, just hold tight, sit on the silver and reap the rewards. But for a new investor, it's lot more risky, if not scary, because you don't know if we've seen markets where sharp rallies uh, have been followed by very sharp corrections. So you invest a huge amount today and suddenly you see a sharp drop for whatever reasons, then you feel that you lost a lot of money. Uh, but then, fundamentally speaking, for the reasons that I have stated earlier, from a long-term perspective, silver looks to be an asset class, a commodity whose prices are likely to move up. Will it be zigzag? Will it continue to be one-way street as we are seeing, etc.? Is probably left to the forces of demand and supply and the speculative forces in the market. But if you are a new investor and you want to take exposure to silver, one, buy on dips if that opportunity comes to you, or buy small quantities as in SIPs. Maybe you do weekly SIPs or whatever is comfortable to you, but yes, you can take a small amount of exposure to silver even now. Okay, don't go overboard, don't borrow money, don't sell your stocks and then put all your money in silver. I would advise against that.
Good. And obviously, existing investors should also continue SIPs and
Yes.
and also monitor allocation, right? Let's say if the allocation goes beyond the prescribed limit, then maybe look at diversifying. I mean, we've also been tracking the Nifty Gold ratio, and which kind of is also at a interesting juncture where Nifty could play catch up now, given that gold has significantly outperformed. If we look at a long-term trend line, so good case for balancing, rebalancing, and ensuring that one asset class doesn't overpower the
Always
others.
the case for diversification.
Always the case, right? Absolutely. So I think on that note, we'll close this short episode.
Yeah. So let there be silver lining.
Absolutely. There's a silver to every line. There's a line to every silver. Every cloud has a silver lining. The markets are now taking it up. Let's be cautious. Let's not hope that this doesn't become a silver knife, and people don't catch falling silver knives, right? So happy investing to everyone.